Thank you one and all for joining the session. And we have Mr. KVS Manian, who's President in Institute of Internal Auditors Madras chapter. He will give a brief background about the ESG and then also introduction of the speaker. Over to you, sir.
Thank you, Jayashree. Good evening, all. We are here today to hear to one of the experts on the subject, which is the talk of the business world. This is nothing other than how can non-financial processes create and protect financial value. This is something very unique and very interesting, I would say. It is nothing other than adherence to enterprise, social, and governance requirements, shortly called as ESG. For many, including myself, it used to sound to me as, is it some nice to have adherence, or is it a pure governance requirement? Is it one more regulatory or compliance requirement which which the organization need to adhere to? Sometimes it looks like a reporting requirement. So is it only a reporting requirement so that people get to know the facets of these three adherence, enterprise, social, and governance? And I also used to wonder, how is ESG helping in attracting funding for the organization, because that is something which is crucial. And there are, as you all know, there are mushrooming of ESG funds, and there's a very there's a rush towards those funds to get funding. How is ESG helping in attracting funding, not only from the ESG funds, but also the other funding sources who are very much interested and who are validating the ESG data of each and every organization? Understand that it is a strategic activity, but what are its extents, and what drives and who drives this particular activity in an organization? Is ESG seen as a sustainability requirement? So also, what are the various benefits which an organization would get if they are compliant to ESG? Is it a subset of some other reporting requirement, or is it all in one requirement which will take care of all kinds of adherence requirements? Is it just a cost center activity, or is it something which is strategic and which is long term for the organization, which will make the organization, though initially it may look like it is an activity through which we'll be spending, but it is something. Is it something which is going to sustain the organization in long term, and because of which the profitability of the organization will grow? With so many such questions, we are here to listen to Mr. Nitesh Mehrotra. It's a pleasant task for me to introduce Mr. Nitesh. Mr. Nitesh is a partner with Ernst & Young, that is, EY consulting practice, and is based out of Mumbai. He has been with EY for around 19 years now. He's servicing multiple global clients and has also worked with EY US practice for 3+ years in San Francisco and Detroit. Mr. Nitesh is currently focusing on environmental, social, and governance framework across his clients to create and protect long-term value. One of his passions is to leverage technology and data for better ESG governance and business outcomes. Mr. Nitesh is also a CIA and CISA, apart from the other degrees and qualifications he holds. He also has ESG related courses to his credit. Thank you so much, Mr. Nitesh, for accepting our invite and being part of this program. We are all eager to listen to you on the ESG trends from a leader in ESG field like Mr. Nitesh. Thank you, Mr. Nitesh. Over to you for the program.
Thank you, Mr. Manian, and good evening to all, and especially thank you, Mr. Manian, for a very warm welcome. I think you very well laid out, the questions that multiple stakeholders have it on ESG. It is an evolving subject, clearly evolving by the day, and I would say I am no expert in it, but definitely I think have been working with our global ESG Center of Excellence team on various topics and on client side. So I think that the language on ESG is evolving, and some of the questions I think that you articulated are very, very pertinent for all of us to ask, understand, and keep a tab on. I would say, Mr. Manian and everyone is, we were in one of the board meetings, and one of the senior board directors summed it up well. He said, ESG is like what digital was a couple of years ago, right? Meaning to say that, a huge mega trend coming our way, and it is something that has to be embedded in everything that we do, right? Like what digital is today, and something that we need to learn, and part and parcel of our life to enhance, what we are doing and make it more efficient. So I think I thought that was a good analogy on where ESG is in some of the subjects, and like everything else, new areas creates a lot of questions and curiosity. And I think what I plan to cover today with the group are some of the points in terms of what we are hearing from our global clients and our stakeholders as we are engaging on the subject, and talk a little bit about some of the leading practices here. We will try to keep it conversational. So my request to all the attendees is, as and when you have questions, please post it here, and we will take a pause between the sessions, to brainstorm together and give some of the perspective on some of the questions. There could be some questions where I may not have the answers, I'll be honest. As I said, the whole space is evolving. Then we will take that up and follow that through with you, so that, we all create, a level of heightened awareness, and I would say proactive approach to this subject. So that's the agenda. We'll be sharing some of the leading practices and some of our perspective that we are seeing globally. I'm also joined by Purvi. She's an experienced manager in EY, also focusing on ESG and focusing a lot on the people and social side of it. So she's also part of our panel here. So Purvi, if you can move to the agenda slide, please.
Sure, Nitish.
Yeah, I think as Mr. Manian spelled out, I think what we plan to cover today is what is ESG, what are the multiple triggers on ESG, is it about compliance, is it about regulation, is it about investors, and the emerging landscape on ESG, because things, as you may have heard, are changing by the day on this entire mega trend that we are seeing. It has both climate and non-climate, so that's what we will talk about. We will share a little bit of our perspective in terms of, as organizations start to look at this sustainability or ESG transformation, what are some of the key building blocks. Sustainability is not new to any corporate. I think ESG or sustainability, I would say sustainability, because the terms are used interchangeable today. ESG, sustainability, climate risk, so they are all interchangeable in some sense. But sustainability, which is a wider term, I think has been part of corporate Inc. for last 40 years. In fact, sustainability as a term was coined 40 years ago. But I think what we are seeing, of late, because of the climate risk and the non-climate risk related aspects, social and equity, I think this whole, frame on environmental, social, and governance has really been given a structure to look at a non-financial narrative of an organization. So we will talk a little bit about what are the key building blocks, what are we seeing organization do, then move a little bit about the evolving ESG leading practices. What is it that the companies are doing? We've been at EY on our own ESG journey for last couple of years, so we are on our own transformation, and we've been also learning in terms of what are some of the lead indicators and benefits that an organization could drive, apart from obviously doing good for the entire environmental, social aspect. So we will share a little bit of that. And then I think for the community, as we look at our, all of us in the room, folks who are part of the governance pillar, risk pillar, controls, internal audit, what is the key role that's all of us in the community can help drive and create and protect value from this ESG narrative? I think that we will spend a little bit of time. And last and not the least, I think we all know sustaining sustainability. I know it sounds ironic, but I think it's very, very critical, like everything else, because this clearly is not one time. So how do we embed ESG onto all the business aspects that we do, from the entire value chain and the ecosystem? And how can, the emerging technologies, whether in terms of digital technologies, whether in terms of hard tech on decarbonization, how can we leverage that technology to innovate at scale and leverage the technology for speed? I think that's the other bit that we will cover. So that's a quick snapshot of the agenda that we will be covering. Yeah, Purvi, we can move on. So coming to, and I think Mr. Manian laid that out, that what should be the triggers? I think as you see on the screen, I'll take a couple of bits here. First one is on the climate risk. I think we all know the climate science on this is real and we are all feeling the impact, but climate change today and overall ESG risk are among the top 3 risks that all the leading risk and opportunity studies globally, whether it's the World Economic Forum, whether it's the World Bank, have been putting out as the top 3 risk opportunities, from an overall, for an organization, and definitely top on the agenda for the board. We're also seeing a lot of consumer interest, right? As the awareness on sustainability is increasing, I think the customers and the consumers are more aware and asking about sustainability and how sustainability is embedded in the products and services. So I think especially for consumer companies and services company, it's becoming a big differentiator in the market. The third one, I think, and one of the most important, we all know money talks, and the money is talking ESG. And what has happened, as a lot of you may know, under the UN Principal Responsible Investing Pledge that the global investors have taken, I think the investors, institutional investors, private equity investors have to look at the non-financial performance of an organization as well. And that's where you see $40 trillion with a T is the amount of money wrapped around ESG today. As per Bloomberg study, this is to shoot up to $53 trillion by 2025, and that's about 1/3 of the asset under management. I think just to give you a sense that how the investor community and rightly so are dialing up on ESG performance, and I think the risk of greenwashing is real, but I think the important thing is our companies doing the right thing, and how do they create as I say, value from their values, essentially is the real bit that the investors are concerned about. And also the climate risk, right? As we all know, as the climate is starting to change, extreme floods, heat, what are the physical and transition risks an organization would have across their supply chain, across their footprint, I think is an important assessment that the investors would need to do. I think Mr. Manian touched upon a very, very important point on financing. And I think that's another huge area on, there are a lot of funds which are putting money on environmental, social, and governance bonds on the debts. And I think there are 2 areas, and this is an emerging field at the moment, but growing very, very rapidly by leaps and bounds in terms of trillions of dollars globally. But I think the main bit is that a lot of funds are looking for cause-based financing. And I think it's an opportunity for companies looking for financing. Number one, access to funds. And also in some cases, we have seen in India and more in globally, where they're able to get access of funds at a cheaper cost of capital. So I think, again, a huge area where you're able to do good by doing good, right? I think is an area that will further boil on ESG financing. So the impact on working capital of ESG, and also as you see the whole market cap, I think is a very, very important area to track. Definitely it should not be a downside risk. If at all, it should be an upside risk for an organization. So that's the one bit. The next one, as you see, the millennials and the younger generation, and now the Gen Z as they're coming to, Corporate Inc., I think they have a much more sense of responsibility and awareness. And I think one of the trends that we are seeing even in our organization, where, the younger generation is more concerned and wants to hear from an organization on ESG and sustainability measure. So it's also an employee engagement measure, and ability to engage employees on real meaningful causes is also an area that is worth looking. And the last and not the least for all of us, and Mr. Manian touched upon, is the regulation. Today, to just give a reference, I think every country on this planet is debating an ESG bill of some sorts or the other. I think India, capital markets regulator SEBI, I think is definitely ahead of the pack from a governance and from being a leader in the space. And they have already come out with a report, and we will touch upon it in our discussion on business responsibility and sustainability reporting. It's called BRSR. It's mandatory for top 1,000 listed companies by market cap from next year, voluntary from this year, and SEBI has indicated publicly they will even extend the coverage on it. So we will talk on that. And also, I think every country, as I said, EU has also come out with their own regulation that's being planned. It's called Corporate Social Responsibility Directive, CSRD, which will be applicable to 27 European states. And also, as you would have heard, even UK has come out with their own ESG regulation. US is also debating a bill on ESG. So I think if I were to draw a parallel for some of us, like the Sarbanes-Oxley that came out on internal controls over financial reporting, I think the same kind of a regulation is being debated in every country, which would, I think, add to the financial performance of an organization. So again, I think a significant role as you see the landscape, right from risk management to differentiating from a consumer standpoint, the investor engagement, the financing bit that is available, and also regulatory aspect to really differentiate in the market. So multiple triggers which are growing by leaps and bounds as we go. I think the other thing, as you see on the heading, is today ESG is not about disclosure, right? Where typically disclosures are binary, right? To give an example, I have a whistleblower policy, yes or no, right? I have an ethics policy, yes or no, which is a binary disclosure. But today, most of these regulations, and especially BRSR, have made it very onerous, some would say, where they're talking about a performance where they want you to share the data in terms of number of ethics complaints, how many trainings have board gone through, your management has gone through, rather than just saying, yes, they're being trained and reskilling is being done. So I think that's the main difference, that it is about performance and it's not about simple binary disclosure in from a regulatory standpoint. So yeah, Purvi, we can move along. So I think I'll quickly keep moving. I think from an ESG driver standpoint, the other bit, and we've been doing a lot of research ourselves globally, I think ultimately ESG also strengthens the resilience. As we all know, it's a very, very critical area. And I think that augmenting the resilience is something that we have seen. I mean, you have seen companies, who were stronger on this during the COVID measure have done far better than others. So I think that's definitely one trigger. And also, as all of you may know, that ESG is about stakeholder management rather than just shareholder management. So I think, how are we engaging and building trust with our stakeholders, whether it's investors, customers, suppliers, employees, and the society at large? I think that's what this frame is all about. So ultimately, one may say ESG about engagement with our stakeholders and understanding what they need from us and how are we delivering value to all our stakeholders, right? I think that's another one. We will talk a little bit about, there is a big reputation aspect, right? Because one is what organization is doing internally, how they are communicating, but also, as you would have seen, the advent of ESG rating. And we'll spend a minute or two on that later in terms of how companies are looking at this ESG ratings and the investors and stakeholders are looking. I think regulatory, I already touched upon. On the right-hand side, I think this is a point Mr. Manian also made, is that, and I think a lot of the leading companies are definitely not looking at it as a compliance activity. I think that's a byproduct, but how can ESG, our non-financial narrative, create a differentiation for us in the market vis-a-vis, from a customer standpoint, from an employee attractiveness standpoint, from an investor attractiveness standpoint, I think is one. Also, as you look at this climate and social equity, how can we can look at new products or new services which could create innovation from an ESG standpoint, I think is significantly another area. And as you would have seen, a lot of companies, and the largest player in the country today are chasing ESG-led innovation, right? Whether it's the green hydrogen, whether it's green assets that they're all creating today. So definitely turning the risk into an opportunity, so to say, I think, and that's again a huge advantage for India as we build our newer infrastructure. How do we create this more greener infrastructure rather than developed countries who've already developed, and the change management and capex change would be very, very significant. So I think, again, a huge opportunity for the country and for all of us. It's a stated policy of the government to focus on green hydrogen, where we are able to reduce our reliance on import of energy to a net exporter, which is a vision and ambition. And as you see, some of the largest business houses in the country are playing to that ambition to really make it real. So I think it's a huge innovation opportunity and upskilling for all of us to really play in this new economy and the new opportunities that would be created. Some would also say that's also a cost optimization opportunity, right? Because today there is a lot of cost on energy, and how do we optimize a lot of these levers, whether in terms of energy, water, because today, as this carbon pricing starts to come, the amount of energy Nitesh is using in his house, if that starts to get measured in terms of carbon rather than just the price that I'm paying, I think it's another area to really optimize and make our operations efficient and start to improve. So I think that's another area of cost optimization, which we are seeing many companies dial up their supply chain and their operation in such a way which is able to drive a lot of cost optimization opportunity. And the last one, I think we touched upon this ESG-led financing, whether it's the green bonds, social bonds. Globally, as you would see, there is a database available if you were to Google on ESG bonds, what bonds companies have taken, what kind of goals are they linked to. I think it's an opportunity which is emerging. It's very, very new in India, I'll be honest, but I think it's growing very, very rapidly, to deploy funds on these, greener measures, so to say. I think at a high level, just to break it down, and I'm sure some of you may be wondering that what is this animal, environmental, social, and governance? What is all out there in this aspect? So these are at a high level, as you see, the energy, water, waste, sustainable sourcing. Social is a lot about people, health and safety, the well-being, L&D, learning and development, reskilling, diversity and inclusiveness, as you see, and obviously one of the biggest pillars that we all play to is on the governance, the board matters, the corporate governance, ESG processes and controls, and we will deep dive into it a little bit more. I think the point that, and I think I should lay it out there, and I think that's one of the problems here, is that the language on ESG today is not standardized or harmonized by far. There was a study that we did, and believe it or not, there were 600 ESG standards and frameworks available by different jurisdiction, right? And I think if you were to draw a parallel to financial GAAP and IFRS standardization, it took us about 40, 50 years to standardize the P, the EBITDA, the P&L. And I think it's obvious that this ESG language is going to take time to harmonize and standardize. But I would say, rather than waiting for standardization and harmonization on all of these measures, as I say, and that's what we hear from leading companies, progress is important rather than perfection. So I think while this confusion, and as we call in our language, alphabet soup, so to say, that you will see all kind of acronyms in ESG, different acronyms which are there, different standards. But ultimately, if someone was to analyze, the principles on all of these are essentially the same, that how are we helping the planet, and the environmental footprint? How are we helping the social, our people, and society at large? And the most important, that how are we governing ourselves to really create and protect value, right? So the emphasis and dialing on governance has really gone up, by far on this. Another thing that I will mention, and some of you maybe know, especially, who are dealing with listed companies and serving them, is the advent of proxy firms, right? As you would have seen, where they are giving a lot of governance related aspect, and a lot of them are driven by ESG factors. So I think that's the other wave that is coming on India Inc. right, where the proxy firms, where globally they already existed, but the likes that you have seen on how they voted some of the owners themselves out because of certain resolution, I think is another area, and this investor activism, so to say, is really growing in leaps and bounds in India as well as globally. I think on the right-hand side, these green boxes that you see, and this was alluding to the alphabet soup, so to say, there are multiple standards and forums, and frameworks and standards on ESG. SASB, as some of you may know, is Sustainability Accounting Standard Board. This is, I think, one investor-led body. It used to be called SASB. They merged with IIRC, Integrated Reporting Framework, as you may know, and they are now called Value Reporting Framework. In COP26 2 weeks ago, it was announced that now Value Reporting Framework is merging with the CDSB, the Climate Disclosure Standard Board, and they are making under IFRS a body of sustainable accounting framework, just like IFRS is, which gives guidance on the gap and accounting principle. The same kind of body is being making. So I think it's a very positive step in the direction of standardizing the language, right? Because one of the questions I'm sure it's in your mind is that what is the language that I need to report and communicate on? So I think that bit is advancing very fast at the moment, and more or less I think standardization is being achieved. And also I think from an India Inc. standpoint, as I said, SEBI has already come out with their very onerous framework called BRSR, which is what you see here, Business Responsibility Sustainability Reporting. It used to be called BRR, so that's being now enhanced to BRSR, where they're asking a lot of the ESG performance data. So I think that will, in a way, become the standards for India Inc. And it's certainly a lot on the leading side versus because it's very quantitative, line item disclosure driven, rather than a principle framework which other countries had. So I think that's the direction we are moving. The other ones, as you may know, GRI is by far the oldest standard. GRI is about 20 years old as a framework, and a lot of companies use. One of the things that for GRI was that it was not sector specific, right? So a company in financial services versus a tech company would all report on same measures. And I think now there is more focus on the sectorization of ESG, because when I look at the ESG metrics of a tech company, I would rather compare the metrics to a tech sector rather than comparing it to a bank, for an example. So I think that's the other bit that's happening on sectorization. WEF was another one where EY, and in fact, for the first time, all Big Four came together last year. It's called World Economic Forum framework, where we came out with a 22 core metrics and a total of 55 metrics, which companies which are not listed could probably report on. And I'm very proud to announce that for the first time, EY globally has also reported on our non-financial metrics, on these WEF metrics globally, and disclosed it as part of our financial performance. So again, I think, to sum this entire bit, a lot of drivers, value creation levers, the language and the nomenclature is getting standardized. But clearly, it's something that companies are trying to lead as a differentiator in the market, rather than seeing it as a compliance or a disclosure activity, which by far would be the byproduct of this. So that's the quick summary. And as you see the heading, as I always say, and we hear this from a lot of the board members and now a lot of professionals like you, that when it comes to ESG, a do-nothing approach is usually an eroding line, right? Because you'll have to dial up on a lot that is being done, communicate and sharpen this language, which you probably may be doing. But today, a do-nothing approach is definitely not an option as the world evolves to a new digital kind of a parlance, as I talked about. Yeah, I think, Purvi, we can move on. So just to deep dive a little bit, right, as some of you may be wondering that what is environmental, what all is covered here, what is social, what is governance, and as you see, I think a lot of these elements that are very, very integral part of an organization and reporting are all being combined together as a non-financial aspect. and reported here. So clearly from an environment footprint, you're seeing the energy and this greenhouse gas accounting, right? It's today called GHG accounting, which is carbon that you need to account today. So that by far is one of the biggest from a climate risk standpoint. Water, waste, how are we doing on the air quality? How are we engaging on sustainable sourcing? What is embedded in my procure to pay processes, and how am I leveraging ESG as a differentiator from a new product development, whether it's packaging innovation, my chemical safety, and all the elements that are going into a product, and how am I making sure that's sustainable and it's not a hotspot, so to say, right? Today, as you know, single-use plastic in the country is being banned. So a very simple layman example, the last thing I would be wanting is in my NPD, putting a product which is leveraging some of these problems, which is going to create problem for me, right? Nitesh today should not be buying a diesel car. I think is very, very important, if that's, feasible as the electric cars come. So I think it's also an impact on capital allocation, as you see. And I know it's not an easy topic, right? Because this debate on coal and energy reliance is very, very important, right? But I think the new strategy of an organization, the way I would allocate my capital, I think is also a very, very strategic item from ESG in terms of where I should be investing, which factory should I be building? Should I be building a solar plant near my factory, or should I be buying solar or renewable, or should I put a coal plant going forward? So I think these are the areas that are very, very strategic from an environmental standpoint. I think very, very critical. If I'm building new buildings, how am I making sure by design they're energy efficient rather than, the old design that have been existing. So I think those are a little bit on the environmental aspect. Social, I think, is all about people, our labor, our supply chain management, health and safety. Believe it or not, cyber is part of social, and some would ask why, because cyber is about human rights. Privacy is a human rights issue. So if I am a consumer company, a retail company, or a finance company, they have my data. How are they leveraging my data? I think it's a social issue, right? Same with our telecom companies and our tech companies, right? For Apple, privacy is a huge, huge area under social, for example, right? So that cyber aspect is coming under social aspects, especially for consumer companies where they have data, and how they're preventing my privacy, I think is a very, very important aspect. Diversity and inclusion, and diversity is just not in gender, it is in age. In terms of diversity is very, very critical. So I think those are the measures that are being boiled. And just to give you one example, like for us, and from a diversity standpoint, can people have mobility across countries? Do people have mobility to move around different subjects, or are they stuck to what they've been doing? Because how do you, generate diversity, and more importantly, inclusiveness in the environment, I think are very, very critical. So what policies the organizations are making going forward are all part of the social evaluation that the companies and the stakeholders would be doing. Governance, I think we are all aware about. And as you see, I think this is also a debate. A lot of people say, look, Nitesh, governance has been there in every organization. It's embedded since day one a company is incorporated. What's new? And I think a lot is new, because as you look at your board, how do you bring them up to speed on ESG? What skill set the board has on ESG? How is the board governing ESG? I think a lot of those measures are being boiled up. How are you linking your executive compensation from an ESG standpoint? How is your succession planning geared up to this, right? Because all the aspects that you see, people are ticking always, right? Because they are part of, at least for listed company, the SEBI LODR. But how do you dial up all of these points and also create a data-led approach to governance, I think is a very, very important aspect. And I believe governance is some of the quick wins relatively, right? Because to improve on environmental and social takes a lot of time. But if you were to look at a quick win on your ESG program, I think governance by far, as we all know, are the quick wins that you can dial up on, because a lot of things you may be doing but may not be disclosing, reporting, talking about, communicating, and also driving meaningful value from governance, right? Because a lot of people, as you know, also set constrained by this governance aspect. So how do you make it in a way that adds value to the organization, I think is a very, very important area. And also communicating, because that's part of governance, whether it's in with your ESG rating agencies, how are you doing from an investor relations standpoint? Also, I think the point that we will discuss is that from an internal audit standpoint, and today, just to give you an example, the EU regulation on ESG is talking about mandatory involvement of audit committee and internal audit on ESG or non-financial aspects. And I think that's something that will trigger a lot of conversation, because just like you need internal controls over financial reporting, you need the same processes and internal controls over non-financial reporting, right? Otherwise, this risk of greenwashing, incomplete data, inaccurate data, I think will be very, very significant. And we are starting to see globally some of the controversies that's starting to emerge. So I think that's the bit. On the bottom that you see are the different stakeholders. So I think you get a sense that it is across the value chain of an organization: buy, move, make, sell, procure to pay, order to cash, record to report, hire to retire. All of these processes would need to have ESG embedded. And also at the bottom, as you see, the IT landscape of an organization, right? Today, if I'm buying emissions, am I buying energy? How am I recording at the source? If I'm buying diesel, if I'm buying LNG, if I'm buying PNG, how am I recording this at the source so that I'm able to convert that tomorrow? If I'm doing L&D exercise on social, if there are cyber attacks, how am I recording that in my systems so that I'm able to report on all of this? So a lot of these ERPs, the supplier relationship management, the HRMS system, the human resource management system, and the governance system, whether it's the compliance, the internal audit, risk management system, all of that would need to be embedded from an ESG standpoint. Because again, just as I said, like digital, ESG has to be incorporated in everything that an organization would do from a people, process, technology. Otherwise, we can't really measure and improve our performance on an ESG footprint. So I think hopefully that gives you a sense of a people, process, technology, and a value chain aspect of different levers. I will also highlight the fact here, and some of you may be wondering that, look, for a cement company, environment may be big. For a tech company, environment is not that big, right? Especially if they're not in data centers or huge guzzling energy aspects. So I think that aspect is very, very right. So governance typically is sector agnostic, but the environmental and social aspects or factors that you see are very relevant to a subsector or relevant to an enterprise. And I think that's the first thing that an organization need to do as they look at their ESG strategy, saying, given the business model that we are in and the operating and the operational environment, both inside out as well as outside in, what are the factors that I should be focusing on? And also, I would say, what are the factors that I don't need to focus on, right? Because otherwise your strategy and your focus will go wrong, and so will your communication, because you will communicate on what you're doing. So I think that, I would say, it's a very, very important strategic aspect that as we look at the design element of ESG program in our organization, I think that's something we need to challenge our business and our stakeholders, and the board would definitely play a very, very active role from running the design of the programs. Because otherwise, the biggest risk in these programs is if you don't get it right first time, then you've lost a lot of time, right? Because to dial up on a lot of these things takes time. You can't improve diversity or energy footprint overnight, right? It's like saying Nitesh has to lose weight. But if he's not at the right KPI, it's very, very hard to drive, and I'll be misdirected on my effort. So I think that's the main bit that I want to highlight, and also the aspect on data governance, I think, which we'll touch a little bit as we go along. Purvi, we can move along, please. I think I'll quickly cover, I think this aspect. Some of you had questions on the ratings aspect, right? So ESG ratings are just like credit ratings globally. The wave of ESG ratings, especially last 2 years, has gone up tremendously. I think, believe it or not, there are 100 rating agencies in the globe today, different parameters. Some of them, they engage with you through a questionnaire and a self-assessment, like Dow Jones Sustainability Index, you may know, as part of the S&P. In fact, they'll come out with their India Dow Jones Sustainability CSA reporting on Saturday morning. You'll see a lot of these companies flashing their ratings for the year. But the others one are unsolicited. Let me put it out there, where depending on what you're communicating in your annual report, in your investor decks, on your website, they would rate it accordingly given the information. So again, I think communication and governance on this rating agency is a key call out here, where while a company may say, look, there are different rating agencies with different frameworks, and that is right, but you need to be monitoring what is out there for your company across different domains. Most of them today, I think for good, has become publicly available, right? So if you know the right source, your ISN number for listed entities especially, you can get your ratings and see your performance. But a lot of companies I know are not governing this properly and not even aware at the board level. So I think that's a significant reputation risk. And this advent of ratings will go higher and higher, I think, as we go along. And it's debatable what is right, not right, which is the rating agency. So I think that's another part of the element, that which rating agency, depending on the sector and the ecosystem that I am in, I need to align. On the right-hand side, I think this is another debate that is going on, and I would say this is data by MSCI. They produce it. S&P also produces data, and I think this correlates to the fact that companies who are strong on ESG measures, their market performance is also much better. As you're seeing, the blue line is much better on the MSCI India ESG leaders, right? Now, what is it saying? It's telling that companies was over a long period of time. Obviously, you can't measure this over 3 months and your portfolio, but over a long period of time, which is what MSCI is showing, the performance of ESG leaders is much better. So I think also showing a correlation, I would say, and there is no causation, but I will definitely say there is a direct or indirect correlation where a company is doing good and engaging with your stakeholders and creating value overall, I think are getting rewarded, by the market performance along with their financial performance. So I think that's another very, very important call out to say that it's and right, because a lot of people say, obviously, I don't want to get into red for the sake of turning green, as an example, right? And I think that should not be the case, because otherwise this whole momentum on climate would take a beating. So I think that's the way the entire ecosystem is moving on overall improvement in performance. Yeah, Purvi, we can move along. Okay. So I'll quickly spend a minute or two on BRSR, right? I think a significant leap ahead by SEBI, our capital markets regulator. We all know BRR, Business Responsibility Report, was always there in India Inc., 500 to 1,000 companies. But now this BRSR, which is a quantitative performance disclosure. Let me emphasize that it's a performance disclosure. It's not a binary disclosure, yes or no, where they're asking quantitative information, most of them on these 140 questions, encapsulating about 300 plus quantitative indicators, as you're seeing here, right? And the other thing that I want to highlight, that obviously right now it's mandatory for top 1,000 listed entities, but it may go broaden. That's the conversation, and even for other sets of company, including private. And I'm seeing a lot of other private companies are also adopting it as a good practice to measure some of these indicators. So if some of you haven't looked at it, my honest request would be, have a look at it, see what value or lead indicators, drivers that you could drive, what data is available on this, and how could you drive performance. And the other thing to call out is that this data would have to be reported as part of your annual report. So it's integrated reporting rather than a separate sustainability reporting, which a lot of organizations have been doing. But it's not structured in the language, as I said, right? Because today I can create sustainability reporting in whichever format. It's not comparable. So I think that's the way this format is going, and I think something that we need to be looking at on this. Yeah, Purvi, we can move ahead. This, I think, again, very onerous BRSR statement. So this comes from the National Guidance of Responsible Business Conduct. As you may know, it was part of the BRR as well. And if you see these 9 principles, which are the bedrock of BRSR, I mean, you see the extent of information that's being called around integrity, ethics, sustainable products, employee well-being. You look at consumer and IT, the data privacy, cyber security. They're talking a lot about human rights, the training that you're doing on human rights, wages and remunerations that you're paying, the environmental aspects that you have by data. So I think this, in some sense, is all-encompassing, and some may argue that a lot is being piled up on this ESG as a non-financial narrative. But this is where we are at the moment, and I think we'll have to think about, as some of the companies would need to start reporting. We are hearing the leading companies would start to, on a voluntary basis, disclose this year, because, as I said, this is about taking a leadership position, then being a compliance activity. And also one of the consideration is, should you report at the standalone or consolidated basis? I think that's another one, to kind of highlight, but hopefully gives you the extent of coverage that BRSR would want you to do going forward. Yeah, Purvi, if you move to the next one, please. Yeah, I think this is a quick quantitative analysis, 140 questions, essential, which are mandatory questions that you have to answer as per the LODR requirement, so to say. The others are leadership indicators. They are not mandatory, but they are voluntary. And as you see, I think the extent of this analysis of this performance report that SEBI is asking gives you a sense on across functional, levers in terms of what all information would come from secretarial, from a governance, HR, manufacturing, EHS, which is part of the manufacturing processes, finance, sales, CSR team, and IT. So I think gives you a very, very holistic coverage that across the value chain, again, how do you start to report as a performance report on this? Because, the main bit here is not just in terms of disclosing, but you will also have to benchmark in terms of where you are vis-a-vis your peers in your sector, either India or globally, because eventually all of this data, as it starts to go out, the various stakeholders will start to measure us, versus others. So I think, again, a very, very important call out, and some of the work that we're doing, it takes a significant amount of time to really collate, baseline it, and also then start to improve this. But there is time, I think, given, the SEBI's regulation, but I think all organizations should look at it and see it as a leading parameter to improve the performance on ESG. Yeah, I think we can move. These are some examples just to bring this to light, where BRR was talking about, qualitative information, whereas ESG is a lot about quantitative information. These are some of the forms, as you see, from a BRSR report. Some of you may have seen where they're talking about very line item wise disclosure on the performance, on your greenhouse gases, on your waste aspect, and also the comparison, just like your financial reporting from current year to previous year. So I think, again, it is something that all companies would need to baseline. So these are just example that how the point is being I would say boiled from a BRSR standpoint. Yeah, I think we can keep moving. These are certain examples, as I was saying, on training, like, again, what training is happening across different sector, segments of employees, board, management people, training on human rights, what is being done, again, by performance, awareness programs for your value chain partners, training on health and safety, reskilling and skill upgradation, again, is a huge impact from a social standpoint. So again, all of these aspects are all, data-led approaches that the SEBI wants us to disclose on from a ESG reporting standpoint. And these are some others. So I will skip, again, like consumer complaints. What kind of complaints are you getting? Who are you getting complaints from? What kind of cyber issues you have? So all of that at a very line item wise disclosures, where some data organization may have in a structured manner, some they may not have, it may be manual, or some they may not even be collating today. So all of the change management in the underlying processes and controls over it would definitely take a lot of time to start maturing these data points. This, I just want to take it to a little bit to the global context. I think I alluded to a little bit earlier, as I said, it's just not India. I think India will also be impacted by a lot of global supply chain, right? Because a lot of our India Inc. companies are supplying and export oriented to your EU, US, right? Our tech sector is fairly export oriented, where a lot of these evaluation would come to impact us, because if, let's say, IKEA has taken a target or Walmart has taken a target, the supply chain impact on us, on a company which is supplying to IKEA, Tesco's and Walmarts of the world is but obvious, because the goals have to be percolated down, right? ESG is like GST in that way. It's just not within the four walls. The suppliers will have to take the same kind of goals to keep the value chain going. So again, I think an important aspect to watch out for. EU has also, European Union, come out with a taxonomy, which is the nomenclature I think I talked about. Again, a step in the direction to standardize what ESG taxonomy should be. And also the CSRD directive, as you see on the right-hand side, where this bill is proposed. As of now, this CSRD reporting will be mandatory for about 40,000 plus companies in EU, whether public or private. There are various parameters in terms of revenue and number of employees. And as of 1st January 2023, right, which is about a year from now, it'll be mandatory reporting. So again, significant point, as I said, is being boiled across all the countries. So from an overall global supply chain, I think there will be a lot of implications, and I hope if companies who are on the leading side, a positive way to really pivot this, and the risk of business disruption should be mitigated, and then you pivot this as a market differentiation and winning new work globally if we are on the right side of the whole ESG standard, so to say. We can move on. I think I just want to give a summary. As some of you may know, COP26, I think, huge conference that happened in Glasgow, and some may argue that very small has been achieved. I think negotiations in some way are still on, but literally tears flowing in the conference, as you would have seen. And we all know, I think these are tough negotiations. I think these are just some of the key highlights that are kind of summarized at a high level. I think analyzing these and interpreting this are complex subject because climate, especially, I think as we look at developed versus developing countries, is a very complex subject where India is still growing. So we need more carbon rather than cutting down, right? But at the same time, the government took a pledge of 2070 carbon net zero goal. I think still very ambitious because we are a growing country and we are still consuming and growing versus the rich who have been consuming a lot of the carbon and it's out there. So this whole carbon accounting in terms of what's available for the world to consume, if we were to go to 1.5 degree, 2 degree or 3 degree scenario, just to, and some of you may know, today the world is already at 1.1, 1.2 levels of, climate change from a pre-industrial level. And the scientists have said 1.5 are the guardrails, right? So if we were to go above 1.5, then the world becomes very, very unpredictable. And especially, I like the point some of the insurance company made, and they said that, look, at a 3 degree scenario, the world is not even insurable, right? And I think that gives you this sense of the emergency that we are dealing with. And obviously, India, growing country, we have a lot of aspirations to grow. Things are just starting to grow for us. So I think it's a very complex debate, as you know, to do. But these are some of the measures. I think the debate on coal and fossil fuel was huge, as you would have picked up. The other big debate, and rightly so from a developing country standpoint, is that the developed world had promised $100 billion a year, and we are nowhere close, and that money never came. So I think a very, very strong point that the developing countries are making, because the developed countries have to give away both in terms of their carbon footprint as well as money for the new technology to be developed for developing countries to, because so as they grow, they are not getting impacted by this climate aspect, right? And it's not a growth impediment, so to say. So I think that's the real debate, especially on the climate risk side. And I think at the bottom, as you see, I think the point that I talked about again on standardization and harmonization, a very big step where the IFRS Foundation, which we, all of us are aware, has announced the formation of International Sustainability Standard Board. And obviously, a lot needs to be seen in terms of how this would go, but definitely the merging of the CDSB with value reporting framework, certainly a positive step towards harmonization of these non-financial reporting standards and traceability. So that's a quick highlight of the COP26 element. I think we will move on. I think let's skip the video. Let's see if it works. But we wanted to just show, and some of you might have seen, Sir David Attenborough, as you know, is a huge nature historian and is doing a lot of research. I think his talk and his one of his plenary that he gave in COP26, I think summed up the problem that we have at hand, and also the aspect of climate equity, right? Because we are developing are not to be blamed purely for this. So maybe, but I think in the interest of time, we'll skip this. But I think if some of you get time, it's all on YouTube. I think it's very clearly sums up, the climate aspects and the risk that all of us are facing from a equity as well as from a 1.5 degree scenario that the world is tracking at the moment. So maybe I'll pause here. I don't know, team, if there are any questions or any bit, or Mr. Manian, if you want to comment as we move ahead on to the second module, so to say, on the overall ESG transformation for an enterprise. But hopefully that gives you a sense on the context and various lenses that we try to put out to get you a sense on what is this subject all about and what all does it entail.
This is fine. I mean, excellent. I mean, really thought-provoking, and it answers quite a lot of questions we had in our minds. So really helpful. I think we can go ahead, unless otherwise there are some questions from the participants. Jayashree, is there any question?
No, as of now, we don't have any questions.
Okay, fine.
Nitish. Yeah.
Okay, great. No, absolutely.
You can also think through, and they can post the questions through the chat box, so that at the end of the session we can take it.
Yeah, absolutely. And I would encourage all of you to post questions, as Mr. Manian said, because there are no good or wrong questions on it. I think everyone needs to understand the basics, and as I said, some of them may not have answers, but I think the more questions we ask on this, the better all of us would be to really help this awareness, knowledge, and also create value for our ecosystem where we are, and also I think our own consumer behavior, because at the end of it, we are also investors, all of us, we are also consumers, we are also employees. So I think all of us has a huge role to play professionally as well as non-professionally and personally on this. So again, I think the more you get aware, the more thought-provoking ideas you get, and I think our ability to add value. So I think we will move on to the next module. I think, as I said, the first one was more about the context in terms of where we are. The next one is more about as companies look at ESG transformation, right? And we come to an enterprise, what should be the goal, right? And as I said, the first one by far is how does this ESG can strengthen our resilience and differentiate in the market, right? It's not about compliance primarily, it's about market differentiation. So I think that's the first role. Second is how do we gather ESG intelligence and benchmarking, right? Today, good thing about ESG is because it's all about disclosure and transparency, a lot is being out in the public domain. So if someone is researching in terms of what leading companies are doing, I think a lot of ideas you will get from benchmarking and a lot of intelligence on differentiating you will get. And the third, and I think the most important, as we look at the stakeholder management, how do we enhance trust from an ESG standpoint? I think is a very, very important area, whether in terms of the data that we report on ESG and also the stakeholder engagement that we do, because ultimately it should enhance the trust quotient of an organization. As we all know, trust today is the biggest currency all of us have personally, an enterprise has. So I think these are the goals that an organization should look at dialing up from an ESG standpoint. Right-hand side, just to give you a sense, I think these are all the building blocks that all of us would need to play on. The first one that I kind of alluded to is that how do we do an ESG materiality analysis, right? Just like we do financial materiality analysis, ESG has its own materiality ways to do in terms of what should I be focusing on in align with my business model. So I think that's very, very important. What kind of framework, standards and metrics should I be adopting given the business model that I am in today, and also more importantly, where the organization is heading. And this is what is called ESG strategy, right? Because you have to look at what to focus, how much to prioritize on what area, and ultimately that should enhance the organization inside and my financial and also outside, right? which is the concept of double materiality that is being talked about. How do we have ESG policy, SOPs, controls? Very, very important, right? Without that, nothing moves in an enterprise, we know. I think the aspect on third-party ESG risk management is going to be very, very big. We all know third-party risk management was a big area, but with ESG, I think it's further dialed up a lot on the supply chain, because it's no longer about what I am doing in my factories, but it's also about what my suppliers are doing, what my toll manufacturers are doing, what my contract manufacturers are doing, right? So that chain becomes very, very important. I think we talked about the rating disclosure, rating IQ in terms of getting the rating. And on the right-hand side, on the bottom, you see the ESG board matters, the governance, and also the ESG, ERM, and internal audit. Some of you may know, or most of you may know, where the SEBI has come out with integrating sustainability or ESG risk in the risk management committee. So I think that's, again, anyways, a part of it. And also, how do we embed on our internal audit risk assessment and our planning on all the ESG matters, I think is, again, a very, very critical area. So hopefully, I think gives you a sense in terms of, you look at an organization, what should be the goals and what are the key building blocks that we should be focusing on. I think top right, you see, I think the ESG digitization is a huge play that you have to digitize, and also sector themes. And for a lot of our practitioners, as we know, embedding this across the 3 lines of defense, I think is the most important layer in line 1, line 2 monitoring, and the independent assurance, and also obviously the line 4 from an external assurance standpoint. So I think those are the bits that that you have to focus as you look at your ESG program within the organization, or assess the maturity of a program. Yeah, Purvi, we can move on. I think this is a very simple approach that we take as you look at, ESG. Sustainability is not new to your organization, to any organization, I hope. So where are we now? How do we do a starting baseline? Where do we want to be? What are the goals and targets that we should be taking? Whether it's my net zero target, my plastic neutrality target, my diversity targets, my governance targets, right, aligned to my business model, and how do I enhance that? And the third is, how do we get there? And we all know, as a community, without integrated governance and risk management and strategic alignment, nothing would move to an organization. So I think that's the way we look at it. Do a baseline, improve the performance in terms of goals and targets, measuring them, and then integrated roadmap. I think, as we all say, more of a cliche statement that we can't improve what we can't measure. So again, has to be a data-led approach for board and the C-suite and the executive committee to know how we are heading, because otherwise a lot of time it becomes very subjective, theoretical narratives. So it has to be a data-led approach to take it forward. I think some of you wondering, this picture it's called, as some of you may know, the TCFD onion, as we call it. It's a framework called Task Force over Climate-Related Financial Disclosure. And if you see, I think it's very, very aligned to our ERM approach of governance at the top. Then comes the strategy layer, then comes risk management and metrics and targets, right? I think it's a very parallel to the way we do our ERMs, right, in that sense. So I think ESG in that sense is very, very similar. So that's why I wanted to list down that for all of our practitioners, I think this approach and this methodology comes very, very clear to us, right? So I think similar approach one could apply to ESG, both on climate as well as non-climate related risks and opportunities. So that's the key action, I would say, that we should be doing from a board and from an organization standpoint. Yeah, I think we can move forward. So without making it too complicated, I think if we were to break this down, I think all the layers that I talked about, whether it's standards, frameworks, ratings, these are all, one may call the, ESG maze or a mosaic, whichever way you call, or a puzzle. But I think simply put, all of these elements one has to work and dial up over a period of time to really, embed ESG into whatever we do in a phased approach, because you can't do this over a period of time. And as I said, progress on this is important rather than perfection. So how are we dialing up on all of these matters, whether in terms of the governance structure, whether in terms of ESG related controls, whether in terms of board matters, whether in terms of communication, both internal and external. So, if you look at an organization, the responsible procurement, responsible supply chain, responsible marketing, responsible financing or ESG financing, all of them will have to play a role to really mitigate the risk and also leverage the opportunity that exists in the market today. So the entire value chain and the entire personalities and personas in an organization would need to be aware, to say the least, of this language to really be able to take advantage of what's happening. And obviously, the compliance and the risk functions, needless to say, would have a very, very important role to play on this. Yeah, Purvi, can move ahead. This is a quick snapshot of a materiality that I wanted to do. If some of you are wondering that how do I look at what is in environment, what is in social, what is in governance. So there are various standards available externally to give you the guidance depending on a subsector that you are in. So if you're a tech company versus a manufacturing company versus a cement company versus an oil and gas company, obviously your factors, ESG factors as we call it, or the risk themes as we call, are very different. So how do you really look at the split between ES and G as a weightage, I would say, and between ES and G, what are the factors that you should be focusing on and also communicating? So again, I think this is a very, very critical aspect of the ESG strategy as you develop and all the other program tenants has to move from this aspect. So again, very, very critical for every organization to do a materiality analysis is very, very critical point that I wanted to call out. Yeah, Purvi can move. Yeah. So I think this, if you see, is another lens. If someone was to say that, look, as we look at our ESG journey and transformation, what do I do from reframing and revising my strategy? Because there are linkages to strategy, as we know. How do I accelerate the transformation? Everyone has been doing sustainability for many years, right? But how do we accelerate this? So what are the work streams? How do we make ESG sustainability operationalize into my standards? And also, how do I build trust? So these are the 4 layers that we believe are very, very important, whether in terms of reframing strategy, accelerating transformation, change management, making sustaining sustainability, and building trust, right? I think as you see, I think all of us practitioners on the call have a very, very significant role to play on many of these, and also the governance of all of these 25 odd work streams that you're seeing. And especially, I think the role that we would have on trust and traceability of this entire program and data-led approach. So again, hopefully gave you a sense that if you were to break this entire program into 25 or 20 odd work streams, what would those look like to really drive change from an ESG standpoint? Yeah, we can move. I think this, I think I talked a little bit about, but again, a very good framework. Some of you, if you haven't seen, do check out this framework called TCFD, Task Force on Climate-Related Financial Disclosure. I think the reason it's very sharp because the investor's lens on climate risk, right? So if let's say I am a big cement company or an FMCG company, how does climate risk impact my business operations, right? So it's outside in, and that kind of an analysis is done by TCFD, whether in terms of transition risk, both physical risk as well as transition risk are evaluated. So if let's say I have 100 factories across the globe, which are the factories which are in water stress areas, which are the factories which have a risk of extreme heat or of extreme flooding. I need to know that, because as I start to invest or set up new factories, I need to be evaluating this climate risk very, very critically. And I think the way to go, in my view, is the geotagging approach, where today there is a lot of data available through external satellites and a lot of analysis, whether it's Google Earth or our ISRO platform of Bhuvan, as some of you may know, is giving very, very good intelligence on a lot of these water stressed out areas or climate risk areas, I would say overall. So I think, again, a very, very good framework to kind of apply to look at the climate resilience and climate risk. And the other call out I would say is, I think embedding this framework in a TCFD in a very meaningful way, I think is another good practice that we have seen globally. Yeah. I think the focus on communication, as I said, a lot of organizations may say, look, we are doing a lot of it, but we are not communicating. And in my view, today, the investor decks, companies who are listed, engaging with their investors, whether it's private equity or institutional investors or listed companies, I think communicate is the way to go in a meaningful, subtle manner, right? Not for the sake of just communicating. Also, how do you disclose data in a very integrated manner, in a framework that makes sense to your investors? And also, I think every organization should have an ESG microsite of sort where a lot of these ESG factors are kind of disclosed, very, very clearly onto your website. Because today, gone are those days where you produce a sustainability report which is produced once in a year, right? You have to communicate actively, and these are some of the good measures where you can dial up, along with obviously your overall stakeholder management that you're doing with your employers, with your suppliers, with your employees, with your customers, right, and other society at large. So I think communication, both internal and external, I think is a very, very important component to really dial up and create value of what we are doing in a very meaningful manner on cause-driven areas. Yeah, we can move. I think just to sum up, I think as you look at, and this comes very, very naturally to all of us, looking at the risk and opportunities, strategic, financial, operational compliance, right? And I think that's the point that Mr. Manian had raised very, very importantly, saying, look, where is it that ESG lies? And if you see today, all the aspects of whether it's strategic, compliance, operational, financial, all of this are embedded in some form or the other, directly or indirectly, from an ESG standpoint. So hopefully gets you a sense, of the important underlying undercurrent or mega trend that is lying their way on across the value chain and business processes from an ESG standpoint, right? Because it's just not about compliance. It has to be part of your sales and marketing, supply chain, your HR, your IT landscape. If companies are looking at growth, strategic opportunities, how are they evaluating companies from an ESG factors? Because the last thing we want is invest or grow or venture out in an area which probably does not give us the best ROI, given the ESG lens. So again, very, very, encompassing aspect of driving value, and also at the same time managing risk and mitigating risk from the framework. Yeah, Purvi. I think governance, I think I'll speak a little bit about that, is very, very important. We call it governance by design. And I think a lot is being, I would say, dialed up because of the ESG factors. So again, embedding this into a governance is very, very important. Today, it's all about trust, and the governance builds trust in whatever we do. And trust is the biggest currency, as we all know today. So again, very, very important from that aspect. Yeah, if you move on, please. Yeah, I think this is one I wanted to fix, and this becomes a little bit of a debatable topic, and I want to call it out very upfront. So saying, look, I think as I talked about, where governance has always been there, right? So governance has various facets here, right, from an ESG standpoint. So one is clearly the corporate governance, right? The traditional governance that existed. I think a lot needs to be dialed up from a board matter standpoint, whether you need an ESG committee at the board level, what kind of succession plan, what kind of board evaluation and other framework from a governance standpoint is being dialed up on ESG, and also the entity level controls, we all know, very, very critical from an ESG. So that's the first module. I think that needs to be refreshed from a governance standpoint. Second, I think we all know governance over financial processes have always been strong, but the governance relatively over environmental and social processes and systems have not been very, very strong. So I think as we start to look at this ESG framework, both climate as well as non-climate, right? I think this will become very, very important. And I think that's the second layer of governance that one has to really focus. And the third, and I think most important, again, like GST, is that governance over your external environment, right? Your third parties, ESG controversies, your key partners, suppliers, manufacturers, again, becomes very, very important, because it's just not within the four walls of the organization, is the entire ecosystem like the ESG. Otherwise, there will be leakages, as we all know. So I think that's the view from a governance that's important, needs to be put in. And also, I would say the overall governance of this ESG program, right? Because These programs are long, right? ESG is not one time, is business as usual going forward. So how do we build the governance on this program so that the amount of money, I think Mr. Manian called out, the cost that you would be investing gives you the ROI, and you're able to measure and tweak your program as you go along, I think becomes important. So the governance over the ESG program also becomes important. Bottom, as you see, critical success factors, I'm sure all of you can relate to it. If things are not embedded in policy, processes, whether it's procure to pay, order to cash, hire to retire, record to report, it's not going to happen. So again, it's all part of the process embedding that needs to happen. I think governance we talked about, internal controls over non-financial parameters and reporting becomes very, very important. So in a way, it's dialing up your IFC or your SOX framework from an ESG lens or your non-financial lens, I think is very, very critical. How do we dial up our technology? Because we can't do this manually. Automating the data governance, how do we automate data is very critical. And I think the most important, as we all know, the change management on this is very, very critical. So how do we enable the change management aspect as the organizations start to go from point A to point B over a period of time? I think is the most important in that sense. So that I think tone at the top, as we say always, is the most critical here, and integrating the risk management is very, very critical to my ESG framework and strategy overall. This, I think, just to give a quick sense on how if we were to look at a 3 lines of defense framework, which all of us are very familiar with, entity level controls and line 1, line 2, line 3. I think it gives you a quick sense on how this framework would look like from an ESG standpoint, right? Because you need policies, controls, a RECI chart. You need an ESG MIS, just like we have MIS on financial data, monthly, weekly, daily. We would need some kind of a near-time ESG performance, because you can't just evaluate your DNI or carbon footprint at the end of the quarter or end of the year. It's too late, right? You have to be measuring this and monitoring this through KPIs and targets. And also, I think the third line of defense, as you see on the bottom, the whole reporting and disclosure, whether it's in terms of internal audits, the controls, the risk analytics that should be embedded from an ESG standpoint, and also compliance. I think is very, very important. Right, while we have EHS compliances, as a lot of these ESG compliances come, both in terms from a customer, investors, and regulators. How do we look at compliance on ESG holistically rather than just statutory compliances? So that again is a very, very important area to look at. We can move ahead. So I think the other section was, I think, looking at some of the leading practice very, very quickly, and I'll cover some of the examples here. I think the board matters points on how do we enhance our board matters, whether it's the CSR committee, our risk management committee, audit committee. How do we enhance that? How do we also focus on board profile, right? It's a very, very important parameters, that how is board governing ESG, and what is the board profile attuned to the ESG aspects, right? So in terms of ESG expertise, whether it's climate or non-climate, in terms of their tenure, age, nationality, how much time is board spending on it, is all part of the ESG evaluation today that you have. ESG committee at the board level is certainly a leading practice. A lot of leading companies, as you may know, have already created a voluntary committee at the board level to really give importance to ESG. ESG goals, linking of ESG goals to executive compensation, right? Because otherwise this risk of greenwashing, right? If Nitesh is a CEO and has come out with a net zero target, how is it linked from a variable component year on year to meeting those milestones, right? Otherwise, it's impacting his executive compensation. I think is certainly a leading practice. Board evaluation, I think while we all know board evaluation is mandatory, how do we, leading practice here is that doing board evaluation externally, and also disclosing the results of board evaluation is certainly a leading practice, and a rating parameters that one can dial up on. Highlighting full independence or getting full independence of audit committee and NRC, the nomination and remuneration committee, is certainly a leading practice. And I know it's not mandated by SEBI, as you know, but I think the point that is being made from an ESG governance framework is that the full independence of these committees leads to better governance. Now I know obviously in an Indian promoter-driven concept, this point is debatable, but it's certainly a leading practice. And the last one, as you see, I think SEBI is chasing that, and it's probably up for go live on 1st April 2022, where the board chair as well as the MD CEO position cannot be related, right? So I think that's in another area that I'm sure some of you may have succession plan, because in India Inc. It is a normal phenomenon, and a lot of leading companies have that. So these are apart from the SEBI regulation, I think these are all leading indicators from an ESG rating and framework standpoint. So I think something for you to consider as you look at your entire governance framework. I think let's keep moving in the interest of time. I think some of them are other measures. Your third-party ESG governance, how are you reporting then that? How are your ethics awareness indicators? What kind of training is happening on ethics? Do you have anonymous complaints? How is your whistleblower mechanism? How well is your code of conduct? How well do you do the pledges from your employees periodically, from your partners? I think are all part of the ESG measures. I think we talked about the TCFD and the science-based targets. I think is another important risk of doing a climate risk assessment. I think all organizations, depending on their business model and their spread, should do a climate risk assessment. I think is very, very critical to know where the high risks are wherever. So I think that's an important call out here. I think Purvi, let's keep moving. Yeah. Then the whole social and people side, the pay equality between gender, between different segments, diversity in your workforce, your human rights framework, the trainings that you're doing on human rights to your partners, right? The tax governance and related parties, a huge aspect of it. Global transfer pricing, what kind of treaties are you in globally? I think is an important area of tax transparency, and all of them are rated as part of the governance framework. I think on the culture part, I can't emphasize that enough. Culture, as they say, the eat strategy for breakfast, for lunch, whichever way you want to call it. So again, a very, very important area on culture measurement and linkage of culture to ESG, because culture is the non-written rules in an organization. So how are we measuring and impacting culture is an important area, and there are various other parameters externally. Some of you may know on Glassdoor and others in terms of measuring governance over ESG ratings. I think we talked about important health and safety dashboards and certain other frameworks. Adoption becomes very, very important. I'm sure a lot of you are aware and obviously reporting, your companies may be reporting, but I think a dialing and performance benchmarking on of these are very, very important. Training, L&D, reskilling, how we're doing for our employees, a very, very important aspect of social within the ESG framework. So hopefully it gives you a sense, I think, of those 30 odd parameters that where all aspects are. I think we've covered this, so I think we'll skip this in terms of your entire board structure, but this was a quick slide that we worked as an illustrative, that how do you, sharpen your board structure from an ESG lens. So I think hopefully it gives you a little bit of a sense. Yeah, I think we can keep moving. These are other parameters. I think we have mapped some 300 odd ESG lead indicators, which organizations should be measuring and reporting across different frameworks. So again, gives you a sense on the impact. I think the external data, I think I talked about, again, is very, very important, because ESG is not what is your enterprise data, but also external data that you have. So again, very, very important area of looking at the external data. This is a quick snapshot of an integrated ESG dashboard. So if your board was to say, what are all the elements that I need to measure from an ESG standpoint, what should a dashboard look like? So I think it gives you a quick sense of all the entity level controls, whether it's ethics, whether it's related party, whether it's obviously the traditional board matters, the third party risk management, IT, cyber, communication, and then obviously the governance, as I talked about, environmental and social, I think are very, very important areas to really see from a overall governance of the program. This, I think I'll pause here after this, is I think the one of the slides on lead indicators. So a lot of people say, look, how do I measure, how my ESG program and the ROI that may be doing? There are various studies going on. In a way, it's the holy grail of, ROI over sustainability, right? And a lot of you may be doing and searching that, because this is definitely a question. These are some lead indicators that we have seen where companies are kind of measuring over a period of time to create long-term value. As Mr. Manian earlier said, how are you differentiating? How is it enhancing your brand, innovation? How is it improving your customer centricity, net promoter score? Because these are all the inherent KPIs that you would measure to create value for you and your stakeholders, right? So I think it's a kind of a gives quick snapshot in terms of how your ESG lead parameters should be, and all of these, as you know, will create long-term value for an organization, as we have an infinite mindset, right? Because organization today, some may argue, are playing with a finite mindset, right? Quarter on quarter shortism. While that is important, but I think you'll have to balance going forward both short-term and long-term priorities, right? Because entity, as we all know, and as we study, is as an infinite, right? It's not dependent on a leader and a CEO, and we just have to leave the legacy behind of the value creation. So I think that's a quick kind of a frame. So I'll kind of pause here. I think these are the key bits that we wanted to cover. I think there is a section on role of internal audit, so maybe we can cover some of these slides, or maybe we can take some of the questions before we move ahead.
Yeah, Nitesh. There are a few questions which have come up. There's one question from Chetan. He wants to understand your views on the supply chain readiness to implement ESG in the Indian context.
Yeah, so no, absolutely. I think it's a very, very critical, because as we said, ESG is not within the four walls. So how my suppliers are behaving on ethics, child labor, on sustainable practices, I think is very, very critical. And it also applies to our logistics partners. You're seeing this wave of greening the logistics, right? EVs and others. So I think one has to look and look at a very careful positioning to say that where are we on a supply chain footprint from an ESG standpoint, and what are the quick wins and the non-negotiables that I need to do. Some of them you will have to grade it over a period of time as you go along, because it would require capex and change management at a bigger level. But I think that point is very, very valid, and a lot of organizations are not geared up to, or if I may say, not even looking at that as a subject. And the other thing that I want to share with the group is that, in fact, we've been doing a lot of study on sustainable supply chain, and we are seeing it's creating and reducing cost and improving the resilience of an organization. So I think the ROI on this is very strong. I think the challenge is the supply chain folks and the entire supply chain needs to understand the language and the value creation framework and then dial up. So I think it's a very, very important point Chetan has raised, that how do we really embed ESG on the overall supply chain and start to measure. My view would be, as I said, to sum up, there should be some non-negotiable that we should not be. The others are a matter of cost and taking tough decision, because there is no silver bullet, right? I think it is tough, to say the least, as you look at your supply chain, especially if you have a lot of investment. So a very, very important area, and something that a lot of organizations are now starting to dial up.
Thank you. The next question is from Aniruddha, and he wants to understand how the companies who are into the business of mining and energy should disclose information, and share prices of companies like ITC has not been raising, even though they are providing good financials. So any inputs on this?
Yeah. I'll take the first one, relatively easier. I'm no expert on market cap for any company. But the first one, I think metals and mining, I think that's the point that I made, that depending on the subsector, there are various standards available on looking at what are the factors on ENS, right? Because ENS are sector specific, G is agnostic, as we said, right? I think that's the first fact that we all need to be clear. So as we look at metals and mining, or for that matter any sector, there are two frameworks. You may Google it. One is called GICS, is a General Industry Classification system, where it gives you by subsector. There are 155 subsectors. You can click on one and it'll give you what are the ESG themes that you should be reporting and communicating on, and more importantly, improving your performance, right? The other one, I think, which I personally like, is called, today is called Value Reporting Framework. It was SASB, where with the framework is called SICS, is called Sustainability Industry Classification Framework. So what SASB did is that grouped certain sectors based on sustainability language, right? And I think that's very, very sharp. So if you look at a metals and mining for SICS SASB framework, which is publicly available, you will get 10 KPIs that you should be measuring yourself against the best in class for metals and mining. So it'll tell you if you are, whatever the ENS measures are, whether it's water, child labor, supplier audits, whatever the key parameters, what you should be reporting on, and which are the companies who are reporting on this on a normalized basis. So I think it's a very good framework. And I would say if you can look at both GICS and SICS, you will get a lot of very specific KPIs, which you can benchmark your organization against leading companies, peers, and also, as I said, communicate on those aspects, because the stakeholders would want to hear from those aspects. So it's a very good question. And as I said, I think there are a lot of frameworks available to give you sector-wise level inputs.
Thanks, Nitesh. The next question is from Mr. P.K. Ranganathan. He is part of IIA Madras, and his question is about how should the corporate business strategy be redefined, or should there be a redefinition of the strategy itself when the company embarks on ESG transformation? And has there been any reasonable success in the project?
Yeah. So I would say, sir, that's a very, very important question. I think as we discussed, I think I would say reframing or revisiting your strategy, I think is a very, very strong call out, right? So I think some of the examples that I gave, your capital allocation policy, I think would need to be looked from an ESG lens, right? Today, Nitesh ideally should not be buying a diesel car, right? Today, company A should not be putting a coal power plant, right? And I think there are a lot of these things that you will know. I should not be putting up a plant in a high flood prone area or in a high heat zone area, right? So I think that part of the strategy, I would say, is very, very important, which is to mitigate risk and drive opportunity. The other part of strategy would be, across sectors. So if you look at, let's say consumer companies that I work a lot, what kind of new products should they be developing from an NPD standpoint to really take advantage of sustainability, right? Because today, Nitesh wants to buy sustainable packaging products, right? Versus a product which is not very sustainable. So I think there is a huge upside from a strategic standpoint as you launch your product or services, right? Either you're in the manufacturing business or in the service business, you have to launch products. And an example of that is financial services. I mean, if you see, they came out with ESG bonds, ESG-led financing. So again, I think all the companies would need to look at, and so there are a lot of companies which are taking huge upside benefits of this. And I would say, why go far? The biggest two business houses in the country, as we all know, the two A's, are dialing up on ESG big time. I mean, the way they are investing on green technology is significant, right? And I think that's the way they're turning this risk into opportunity and really reframing their strategy from an ESG lens. And the same applies to automotive companies, right? So today, the big incumbents on automotive are struggling and trying to pivot, where the new startups are agile and coming out with a lot of it. The debate is on in terms of who will win, the incumbents or the new players. So I think a lot is evolving, and I think to say the least, to sum up, all companies need to look at their revisit their strategy from an ESG lens, because there are significant risk areas as well as significant opportunities that they can dial up on.
The next question is also from Mr. PKR, and this is on the board. How should the board evolve to oversee, enable, and support delivery of the ESG transformation and sustainability strategy? And what are the key challenges that are foreseen in the boardroom? dynamics?
So again, very, very important question. We all know without board being involved, the organization may not move, the needle, and board is the biggest body that should govern. I think what we are seeing, leading companies refreshing the charters of their committees, whether it's the ESG committee, if they are making a new committee, whether it's the CSR, whether it's the RMC or the NRC, to really change the terms of reference to really include ESG governance on that. I think that's the first point. Easier said than done. It will take time. I think the biggest challenge, as was asked, is that how do I reorient my board, or as I look at a succession plan of the board, get experts who are experts on ESG and climate risk and others, depending on the business model that I am in. It could be around social as well. So I think getting the new kind of knowledge so that board can steer the conversation in the right manner and ask the right question, I think is a significant challenge. So there is a bit of, if I may say, a board reskilling and orientation that is required. And some of the leading companies are looking at it very, very, in a very significant manner. But this point is very right, that the board is the real body, and they have to be brought in to this entire program, both in terms of monitoring as well as navigating this complex and VUCA journey, if I may call that.
The next question is again from PKR, and this is relating to the skills and talent. How do we attract, develop, and retain the leadership, talent, and skills required for the ESG transformation journey? And since it is more significant as today's skills and talents are hard to find on the ESG front.
I think that's again a very, very important point. And today, the dearth of ESG professional is extremely stretched. So I think one way it's a huge opportunity for all of us to really pivot and really create value for it. It is a reskilling, I'll be honest, where understanding this nomenclature language, but I think hopefully most of us or some of us do relate with the cause. The reskilling on this is not difficult, and I must say that, and I've been looking at this field for last 2 years or so. There are a lot of easy courses available, and some of them are free, where it helps you to orient. TCFD is one source where it'll help you to take courses online and take certification is one. There are some other bodies, whether it's the CFA body as well as the SASB, which I am now certified on, helps you to really orient yourself. So I would say the call out for a lot of our finance professional and governance professional is to really upskill ourselves and really help the community. There is a big shortage, and I must say that people have to know in depth, right? Because what happens is in life is that you get some and you think you're an expert, and then it kind of dips. It's a you, right? So I think there is risk of greenwashing is real. So I think we should not play without understanding the concept, because we all know, as they say, partial knowledge is worse on this. But I think over a period of time, we all should pivot. And I think the talent crunch is there, because it's again, as I said, if I were to draw a parallel, as we talked about digital, where everyone is looking for digital professional and there aren't none, because the demand on this is massive. But I think there are pockets where the ecosystem will have to start orienting a lot of our traditional mindset into ESG lens, and hopefully that'll ease off the talent crunch. But today that point is valid, that there are very few ESG professionals who are able to understand the entire program and be able to add value to this. So it is a challenge, but hopefully, in one way, it's a good problem to have. But I think as India Inc. pivot, I'm sure a lot of us will have to play a very significant role in different personas that we all play in.
Thanks, Nitesh. Relating to this, there is a question from Yogita. She wants to understand what are the career opportunities for fresh CAs in ESG, and what will be their role and contribution?
Well, absolutely. Thanks, Yogita, for asking. I think it's a very, very important one. I think we as finance professional, I would say, understand the processes and the systems and the way people process technology interlock work. So I think we have a very inherent advantage in bringing this entire ESG program to play. But we would need to orient ourselves to understand these standards, and also orient on certain programs. And as I said, if you look online, there are a lot of these programs that are available. Some are very quick. Some would take time for you to do and get externally certified. And I think that's the way to go. They aren't very cost prohibitive. Doesn't take a lot of the times. I have done over the last few years, done many of these courses, to really enhance my education, because, believe it or not, the board members have to do the same. And today I get a lot of questions saying, what courses should my board members be doing? So I think it's across the board where everyone would need to be oriented, but there is no dearth today in this virtual worlds of these digital courses which are available, insights, knowledge. And I say the biggest thing that you can do is just read, because the amount of literature, amount of videos that is available on this is significant. Know the right sources, because a lot of them may not be credible, and this risk of confusion and greenwashing is real. But I think there are a lot of these credible sources which are available in the public domain that'll help you to really accelerate your knowledge and be able to meaningfully contribute. So I think it's a big shout out to all the community to really enhance and really take advantage of this wave. In a way, someone will say it's a tsunami coming that we will be able to ride to take this opportunity. And I think it's a huge opportunity for India and for us, which are emerging in this game, than the developed nations. So I think a lot for us to play on. And I think it's very, very net positive for us if we were to play this well and do it with the right intent.
Thank you, Nitesh. There's one question from Chetan. Are the standards available for auditing ESG framework?
Yes, they are. I think some of the good standards like SASB that we talked about do have a very technical guidance on how you need to give assurance on that. So they are technical in nature. And obviously someone who's assessing should need to be certified on them as well. I think the key point that I would say is that today a lot of regulations haven't mandated ESG assurance, right? So a lot of companies, I'll be honest, get away with reporting whatever they want to report, and they are not externally certified. And I think this wave is coming. And just to give you a sense, the EU regulation that I talked about, CSRD, which will be applicable to 27 countries, they are talking about a mandatory limited assurance on all ESG reports, right? Today, BRSR hasn't mandated it, and I think it's good because India Inc. also takes time. So I think the assurance on these standards or the reports that the companies would be doing will definitely enhance the trust of the stakeholders, right? Because and I think it's a big demand from the investors and from the global customers to say that what is being reported is being externally verified. So yes, the standards and the reports, technical guidance is available. And I think this formation of the International Sustainability Standard Board that I talked about, which was released in COP26, will formalize this like the IFRS way, where there would be standards on doing this. So yes, I think that is improving and increasing as we speak.
There's one last question from Mr. PKR. In an ESG transformation project, who do we need to be successful?
Yeah, so again, very, very important question. And I'm sure there is no one size fits all. I think one has to look at the culture and the structure of the group or the organization that you're in. But I'll call out the key stakeholders irrespective. I think the CFO is a very, very important stakeholder, because tomorrow the ESG program, capital allocation, reporting, compliance, decisions would all have to flow through the CFO layer. So I think CFO is a very, very important stakeholder. I think all of us in this room today, the internal auditors, the chief risk officers, the stakeholders of ERM have a very, very important role to play in this program in terms of how it's getting governed. The other one that I would say is definitely the supply chain folks, right? Depending on the industry you are in, I think would have a very important role, to the point that we discussed earlier, where it's just not us, but the ecosystem. And the last and not the least, I would say the CIO community, right? The information officers would have a very, very significant role to play as they are implementing new ERPs, new HRMS, new SRM system, new DMS system, new compliance system. How is that get ready from a sustainability standpoint? Because sustainability is here to stay. This is business as usual. So I think how do we get this first time right, as we say, is very, very critical. So I would say these are the key players. I think as we move along, the chief marketing officer in terms of communicating, the investor relations folks under the CFO, I think would also have a very, very important role to play. So I would say these are the main player, and needless to say, the CEO and the board would have to steer the journey because they have the overall picture. But the finance professional, all of us in the room, have a very, very pivotal role to play to operationalize the strategy, I would say, and making sure we are progressing in the right direction and call out the risk and opportunities.
Thank you, Nitesh. These were the questions that we had, and thank you for patiently answering all the questions. Now I would request Mr. Manian, who President IIA Madras, to release a newsletter for November, and it is issue 2 newsletter of IIA Madras chapter, and for November and December. Over to you, Manian sir.
Thank you. But at the same time, no, I can do it after the presentation because I understand that there is some more. Is it over, Mr. Nitesh, or
there are just 2 or 3 I think we want to cover on internal audit, sir. If you permit and the time allows, I'll cover that in few minutes quickly, if that's okay.
Do it, sir. After you complete, I will do it. Okay,
all right. So I think just Purvi, if you move quickly, yeah.
I do not perfect the flow.
Yeah. I think the role of internal audit, and I think some of it we discussed during the discussion, but I will highlight that in a simplistic manner. I think internal audit, I think needless to say, have a very pivotal role, and I think a lot of regulations are now even mandating internal audit spending time on ESG and sustainability and non-financial measures, right? And EU is one example where they're mandating that, right? So anyways, that's coming as part of the overall governance. But I think looking at the overall program, the resilience aspect of ESG, I think we talked about looking at ESG report and data that we are disclosing. I think the completeness, accuracy, controls on it is very, very important. We also will have, as always, right from consulting mindset to assurance mindset. So if you look at from a consulting value add standpoint, all the points that we discussed today of a program will be very, very critical to steer for an organization, advising them on ESG goals, sectorizing them, benchmarking the ESG journey to others, I think is very, very important. I think embedding ESG issues and risk into internal audit risk assessment plan, I think are very, very critical. And as I said, EU is already calling out for it. Embedding ESG into ERM and monitoring that ERM mitigation plan, I think is very, very critical. SEBI has already called out for integration of ESG risk into ERM, just like cyber. So again, very, very important. And also, I think, and the last one is, which we all do as we look at every process, whether it's procure to pay, order to cash, record to report, hire to retire, how is ESG factors embedded and the internal controls embedded, I think is a very, very important. So my call out would be that from, and I'm sure some of it you may already doing as leading companies, but definitely orient you and your team and call out all of these aspects from an ESG aspect standpoint to really drive value for an organization, and also highlight these points to your audit committee, RMCs, and to your board, to really create awareness of this. So I think a very, very pivotal role, but hopefully gives you a sense on very, very specific structured work stream, which we are seeing globally, large internal auditors already playing on this. And in fact, this year, we're seeing a lot of discussion that we are doing ourselves as EY as well, that embedding ESG risk assessment as part of our internal audit planning as the plan starts to come up, for the next year. So again, a very, very important call out here. Yeah, Purvi, if you move to the next one. Yeah. This is a quick snapshot just to give a very simple, kind of a maturity assessment. Again, internal audit would have a very important role to also assess, right? As you look at your organization inside out, saying where is the organization today, and hopefully gives you a sense on where the leading companies would be. I think we talked about all of them. So again, I think giving a sense to your stakeholders, to your executive management, to your audit committee board, in terms of where you are in your maturity, I think is again a very good value add aspects that all of us can bring to these discussions and really be able to differentiate our internal audit program. So again, I just wanted to put it out there, and we've created this framework which hopefully will help all of you to give you a quick maturity assessment as a value add for the management. So I think that's the pretty much that we wanted to cover. I think there are some other snapshot. I'll skip this, but obviously as you look at your entire program from a people, process, technology, I think a lot that you could cover. So thanks again for the opportunity to speak to you, and thank you all for the patience for last 90 minutes or so. Back to you, Mr. Manian.
Thank you so much. It was an excellent and an eye-opener. In fact, you answered many things, especially ESG kind of things, like you cannot handle within 1.5 hours. You did it excellently. Thank you so much for that. So I will now release the newsletter just for everyone's information that, we release bi-monthly newsletters which carries the messages from the president, secretary, and also the editorial, apart from the relevant themes which we take up for the respective bi-months, meaning 2 months once we have a particular theme, and we design our newsletter also in the same lines. For this month and the next month, that is November and December, we have chosen ESG as the theme, and we are, in fact, your program is the first program, and we have planned to conduct a few more in these 2 months. So with this in mind, we have also come out with a newsletter, which I'll be happy to release digitally to all our viewers. So I make myself as the presenter for a moment, please. Just a minute. I have done it by myself. Just give me a moment. I'll share it. So hope you are able to see this.
Yes, we can see.
So this is the newsletter which we are, which we have made for IIA Madras. This is a bi-monthly newsletter, as I was telling you. So this contains my message and secretary's message, and also editorial. We have primarily spoken about ESG. So even the content of this, if you could, you can very well see that it is about ESG. So since the theme is about ESG, same with secretary also, and the editor, Jayashree. And we have come out with a small article on ESG framework, and also internal auditor's role in ESG. So apart from that, we do have the program calendar in this. So it's a very brief newsletter, but again, the idea of I am stopping the screen share. So the idea of having this newsletter is to communicate the kind of things which we try to do, and also the theme, and also the calendar with all the members. This is an e-newsletter which goes out to not only members, but also the corporate houses, and also to other IIA chapters. So thank you so much for the opportunity to release the newsletter. Over to Jayashree. Thank you.
Thank you, Manian sir. I would like to call upon, request Mr. Krishna to deliver the closing remarks.
Thank you very much, Jayashree, and thank you very much, Mr. Manian. Considering that we are almost on overtime, we are actually on overtime, I will probably keep it very brief. But I take this opportunity to importantly thank Nitesh, who is my colleague and EY partner, and for readily accepting to do this session for IIA Madras. As you'll all agree, ESG is a very important and emerging topic, and the topic whose time has really come. And Nitesh really readily agreed to do the session for us. He does a lot of work on ESG, as you can see, a very data-filled presentation. And Nitesh, I'm very happy to say that I've started receiving very positive feedback on the session already. So really thank you again. And I also thank Mr. Manian and the IIA team for recognizing the importance of this topic and doing this session. And also not just this session, but there are a number of other programs which have been planned by Mr. Manian and the team for on the topic of ESG in this month. And as internal audit and risk management professionals, it's important that we start looking at this subject very keenly. And there's something as simple as we can apply our lens of ESG on the reviews that we do, each and every process and systems audit that we do, to actually taking a much more involved role in the ESG program for organizations. This is clearly a priority for organizations. So with that, I'll probably hand the session back to Mr. Manian or Jayashree.
Thank you, Krishna. Thank you for the closing remarks. And thank you, Nitesh. It was an excellent session, as all have been mentioning, and it has been also recognized. I mean, we have been receiving a lot of positive responses already in the Q&A chat box as well. It was very informative, and I think this is the right start that we had for the ESG session, because you covered from the start till the end of the entire transformation journey on where do we start the about how the board has to be involved, and then you ended up with how the internal audit has to conduct and what kind of things that they need to cover. So it has been very informative. Thank you very much for making this presentation so useful for us. And I would like to also thank all the attendees who have been there till the end, and I hope they would also see value and also see value in all the other future sessions that we are going to conduct. And thank you, Mr. Manian, and thanks, Krishna, for joining in the session and being throughout the session. And thanks to all the other participants as well. Thanks, Purvi, for handling the session for Nitesh. Thank you very much, everyone. Tomorrow, we do have one session on the CIA orientation. We request all the attendees who would wish